Do you really think that even with 20 losing trades out of 53, a signal channel can still pull off over $10,000 in profit in just a month? Sounds like a fairy tale, right? But today, we're diving into a signal channel so high-performing that it only has a maximum losing streak of 2 trades, like a cat with 9 lives, but for trading. Buckle up for the wild ride. This is a signal channel specializing in Forex and gold. Over the past month, it has provided a total of 54 signals, achieving a win-slash-loss ratio of 34 wins to 20 losses. If you believe this channel is not worth following based on these results, you may be mistaken. With an average risk-slash-reward ratio of 2.16, the channel's monthly performance stands at an impressive 84%. Now, let us review the summary table of the channel before proceeding to the detailed analysis video. Now, let's dissect Week 1's 0302 to 0702 to 2025 benchmark trades, featuring the all-time high R multiple achievement, 39.21 R, and unprecedented holding period, 6 days 18 hours 35 minutes. Highest profit trade, ZOST achieved 39.214 R, lasting 20 hours 30 minutes. Proving the potential of long-term trend trading. Longest trade, August, was held for 6 days 18 hours 35 minutes, confirming the effectiveness of long-term holding strategies. This trade nearly hit TP but then reversed, extending for another 2.5 days. A shorter TP could have closed the trade earlier, freeing up capital but reducing profits. However, constantly adjusting TP out of concern can break discipline and consistency, leading to losses in the long run. Sticking to the original TP may not always maximize profits, but it is a fundamental factor in maintaining stability and consistency in the trading strategy. Week 2 maintained stability but lacked the breakout move seen in Week 1. One key reason was the absence of a high-profit trade exceeding 39 R, leading to a more evenly distributed total R without any sudden surges. The number of losing trades increased slightly, impacting overall performance to some extent, but it remained well within control. Most importantly, patience and trading discipline were upheld, laying the foundation for long-term stability and growth.
The highest R trade of the week lasted only 6 hours and 23 minutes but still secured an impressive 3.961 R in a short time. After that, the price continued to move further, and if the TP had been set higher, the profit could have reached 8.24 R. While there is a slight sense of regret, taking profit according to the plan remains a safe choice, ensuring gains are secured and discipline is maintained. Most importantly, the strategy continues to prove effective, delivering steady profits and laying a solid foundation for future opportunities. The trade hit TP1 and nearly reached TP2, missing by just a few pips before reversing at the 2,940 level, eventually returning to TP1 and closing with a 1.3 to 9 R profit. If TP2 had been set slightly lower, the profit could have reached 4.85 R, highlighting the importance of avoiding TP placement at round numbers. In the future, a slight adjustment in strategy could help optimize profits and better capitalize on market movements. This week saw a strong recovery with a total R of 17.967 and a 78% win rate, highlighting the effectiveness of strategy adjustments. Holding trades longer optimized profits despite the same number of losing trades. Compared to the previous 2 weeks, risk management and adaptability have significantly improved. The gold trade on February 17th was the longest held trade of the week and also had the highest R. This trade exemplifies an effective strategy for optimizing long-term trends and managing risk efficiently. The entry point was well-timed, almost capturing the full trend. The stop-loss SL was placed safely, minimizing the risk of being hit. After a short sideways phase and the appearance of a doji confirming the trend, there was a 90% certainty that the trade would continue in the expected direction. At this point, moving the SL to entry was a logical decision to eliminate risk while also increasing the R ratio. When the price reached TP 119.12, it started to move sideways. At this moment, the channel placed a sell hedge trade, likely as a way to secure partial profits while waiting for market confirmation. Shortly after, the price continued its upward trend, causing the hedge trade to hit its SL and close at a loss. However, this was not necessarily a losing trade, but rather a strategic move to protect gains from the main trade. The idea of hedging at TP1 instead of closing the trade completely could be a potential strategy, allowing for profit maximization while maintaining risk control. This approach sacrifices a small SL in exchange for the possibility of higher overall profits if the trend extends further. Once the long-term trend was confirmed, the channel executed 3 consecutive buy trades at different price levels, further maximizing profit potential. This demonstrates a flexible trading strategy, not only focusing on holding positions but also seizing opportunities to increase gains when market conditions allow. The last to sell orders reflect an attempt to take advantage of the market's pullback, but buying pressure remained dominant, preventing the price from moving as expected. The price hitting the stop-loss level suggests a lack of strong confirmation for the downtrend, indicating the need to consider momentum or resistance zones before entering a trade. However, the stop-loss placement was reasonable, helping to control risk and maintain consistency in the trading strategy. This demonstrates discipline and a structured approach, which are crucial for long-term performance. If entry points are adjusted with clearer trend confirmation, similar trades in the future could yield better results. Additionally, market sentiment at the time of execution should be considered, as short-term fluctuations can sometimes create misleading signals, leading to unfortunate stop-outs.
This week achieved a total of 21.913 R, with a 79% success rate and 6 losing trades. Notably, the bust trade hit SL within just 25 minutes, indicating that the entry might not have been optimal, or the SL was placed too tightly, leading to an early stop out before the price moved as expected. On the other hand, the gold sell trade at the end of the week yielded 7.833 R, nearly compensating for all other losses. Overall, the trading strategy remains stable, with a flexible approach between buying and selling. However, it may be worth reconsidering SL placements or entry strategies to avoid early stop-outs like the bust trade. Despite this, the week still delivered solid profits and maintained a consistent performance. The GBP/USD trade this week hit SL quickly, possibly due to a liquidity sweep before the price moved in the expected direction. The entry was quite reasonable, but the SL was set too tight, leaving the trade with insufficient room to move. This highlights the importance of choosing an appropriate SL placement, especially during periods of high market volatility. A more optimal approach could be waiting for clearer confirmation before entering or widening the SL to avoid unnecessary stop-outs. This serves as an important lesson for refining future trading strategies. This gold trade is a prime example of effectively capitalizing on a key breakout and trend confirmation. The entry was taken right after the price retested the 2,860 to 2,862 resistance zone, with a clear rejection candle signaling selling pressure. Notably, the SL was placed strategically above the resistance zone, preventing unnecessary stop-outs before the price made a sharp drop. Meanwhile, TP was set around the 2,843 to 2,845 support area, which had previously shown strong reactions. Technical indicators such as RSI below 50, a downward sloping EMA, and price closing below the Kijun Sen all aligned with the bearish momentum, confirming a well-structured trade. A well-deserved win, reflecting discipline and a solid strategy this week. This signal channel demonstrates strong performance, achieving a total monthly R of 189.709 with a 90% success rate. While there were 20 losing trades out of 54, the overall profitability remains high due to effective risk management and a strong average RR of 3.88. Key takeaways: 1. The system effectively maximizes profits while keeping losses under control. 2. Losing trades are part of the process but are well managed to ensure long-term gains. 3. Traders following this signal can expect consistent growth, provided they adhere to proper risk management strategies. Important note: although the win rate is not 100%, the key factor lies in capital protection and high R multiples, ensuring that even with some losing trades, the overall profit remains significant. This approach requires discipline in following the strategy without emotional decision-making. Overall, this is a high-performing signal channel with a structured approach to risk and reward, making it a strong option for traders looking for sustainable profits. This is the optimized summary based on Tadaup's method after adjusting 2 gold trades, the buy order at 1:39 p.m. on 02/17 and the sell order at 7:50 p.m. on 02/28. After applying Tadaup's capital management strategy, performance increased by 80% compared to the initial results, effectively doubling the profit. Compare the results to see the significant difference after optimization. So, we've analyzed and compared the performance before and after optimization. Pretty impressive results, right? Rocket optimizing risk management and strategy not only boosts profitability but also enhances risk control. The most important thing is not just looking at high profits but understanding how to sustain them in the long run. Making money is hard, but keeping it is even harder, so always apply solid risk management principles to protect your gains. Bar chart sparkles. If you found this video helpful, don't forget to like, share, and subscribe so you won't miss out on more valuable insights. Chart increasing light bulb. Thanks for watching, and see you in the next video. Trade smart, stay safe. Fire money bag.